Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of economic and credit warning signs from all over. Firstly, in the US, home builder sentiment recorded its steepest one-month drop in over 4.5 years in November. Rising mortgage interest rates and tight home inventories are pushing up home prices generally and squeezing affordability for the home building sector's products. And it is not only home builders seeing lower demand. Apple is reported to have scaled back its orders for its latest products. The S&P 500 is down 1.7% in a broad sell-off today on Wall Street. Yesterday, Shanghai closed up almost 1%. Japan has recorded an unexpectedly large goods trade deficit in October as higher oil costs led imports to rise at their fastest pace in nearly 5 years. The subsequent oil price fallback will unwind the trend, however. And staying in Japan, Carlos Ghosn, a famous cost-cutting executive, has been arrested in Tokyo by prosecutors for alleged financial misconduct at the Nissan car company, a company he has led for almost 20 years. The company said it was preparing to sack him as chairman. He is also the head of French car maker Renault, leading a close partnership between the two companies. The French government has stepped in to reassure its Renault stakeholders. In China, after years of booming growth, their real estate sector is wobbling. A state bank research report says their real estate market will face a year of recession in 2019. Sales, investments and new construction starts will decline significantly next year, they say, and the government should abandon recent policies that were put in place to cool the market. Developers are showing stress signs too. In India, the stress between the government and their central bank has been dialed back substantially with a new agreement between the two for the central bank to pay off the government. No kidding. The regulator will now allow restructuring of stress loans to small and medium enterprises and will move to make a very large surplus transfer to the government. In Australia, they're piling into a new sport of flogging bank management. Anything goes, apparently, with the standard expected of them not matched by the mob. The most likely outcome is a retreat into a severe credit crunch as risk-averse mindsets take hold, especially in home lending. Spillover into the New Zealand economy is likely, and even if it isn't, the impact on the Australian economy from this sharp retreat will be substantial. The US Treasury 10-year yield is starting today unchanged at 3.07%. However, their 2-10 curve is wider at 29 basis points. At the short end, there is pressure building on the Chinese currency as US Treasuries rates have pushed higher than Chinese government bond rates. One-year government securities in China yield 2.611%, now below the 2.684% offered by one-year US Treasury notes. This is a turnaround from the usual premium for Chinese government bonds of as much as 2%. And gold is unchanged this morning at $1,222 an ounce. And US oil prices are stable again today with their new lower levels of just under $56.50 a barrel, while the Brent benchmark is now just over $66.50 a barrel. And the Kiwi dollar is starting today a half a cent softer at 68.3 US cents. While the cross rates were unchanged at 93.8 Aussie cents and a half a cent lower at 59.7 euro cents. That puts the TWI at 72.5. And Bitcoin is sharply lower again today, now down at $5,053, almost $500 lower than this time yesterday, and a 9% dump in a day. At one point, it dipped below 5,000. This is a sentiment crash and not triggered by any specific event. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.